I had a look at the PSLV today, even though I'm not holding this fund right now. Kind of glad I got rid of it because I could actually buy it back cheaper even here. But I expect silver to drop further due to some type of problem with the euro. Although I would love to see it just go to $500 an ounce or something and get rid of it. I don't care. But looking at this PSLV, it actually remained steady today. It was unchanged. And looking at the silver, there was a price increase of 1.11%. So I assumed that the PSLV premium dropped, and yes, it did. I looked it up last week on Monday, March 12th, and it was 8.05%. Today it is 6.7%, so the premium is dropping. And I was also curious to see the difference in the price between, there was actually from the February 29th high to today's close, there's about a 12% drop in the price of silver, but in the case of the PSLV, there was a 13% price drop. Now, the only thing I can't stand about this fund is, I think the premium is going to return as the price of silver goes up. But I don't know when Sprott's going to do another offering and do one of these deals where you go from 24.5% premium to 9.1%. So I think I'm going to go partly in with AGQ and PSLV. I'm not going to do if I hopefully the silver bottoms out. Now I'm rooting that silver goes down in the short term for the next 2 or 3 weeks because I'm doing a short position right now, and I don't know if that's it's a dangerous thing to do, quite obviously, and I don't know how well it's going to do this week because silver does a thing where it's like sudden death. It doesn't it could jump up fairly quickly, but it never jumps up as fast as it jumps down. It's quite obvious. This was a weekly chart, and I just had to point out again that we're still in a bearish trend no matter how you look at it. Most of this rise came all during QE, quantitative easing. 2008 crisis, there was even a more severe percentage drop in silver, so to me it's not unreasonable that it can go lower. But as far as where it's at right now, I think it's getting ready to make a turn again downward. But what's going to really drive it down is if there's a major European crisis that they're keeping hush-hush about. It's just my guess, but something doesn't smell right about this whole European situation. This is a Euro chart. Now, right now, this is a weekly chart, but I just want to point out something else. Every time you had this rise here in the euro, basic rise for this length of time, this was approximately the time of QE2. That's kind of like the euro rises, the commodities rise. It's not a perfect correlation, obviously, but QE2 propped up the euro. And over here, a lot of this was QE1 propping up the euro around this time. And of course, this major drop was the financial crisis. Now, what I find interesting, I remember before this financial crisis, everybody in the world was saying, buy the euro to save yourself from, because your dollars are going to nothing. Everybody, all the conspiracy theorists and all that stuff. And I'm glad I bought silver instead of euros because I didn't trust that stuff. But actually, I bought silver before this, but they were all saying to buy. Actually, wait a minute. I think I bought silver down here someplace when this all crashed. Excuse me. That's when I bought it. But they're all saying to buy euros around this time, right here. While it's high, and that is your typical mistake that everybody makes. They look at the curve and they say, look, it's going up. Look at that trend curve. Yeah, well, there you go. And that's the same deal with what's going on with silver right now. We're still in this stupid correction. There's nothing we could do about it. I mean, but it's gonna change, and there's some more hints of QE. They're calling it sterilized QE. But first, I want to get into something about this euro situation again. I know they're not telling you everything that's going on, and it's just like anything. Bear Stearns is fine, Lehman Brothers is fine, AIG is fine. Yeah, okay. Anyway, billions of dollars will be paid out on the Greek restructuring, and with sovereign debt markets still shaky, the exposure to banks is enormous. Derivatives markets are estimated to be in excess of $600 trillion. While a substantial amount would likely be netted out, canceled out, in other words, it's not 600 trillion because a lot of stuff gets zeroed out. It's like intra-company stuff or something. The exposure to financial institutions that underwrote credit default swaps instruments is still astronomical. That's why I think there's something coming up. I don't know, because they're saying right now this is just a few $billion, but somehow something doesn't seem right to me. Anyway, not really because of some of the other predictions out there, because I've lost total faith in the conspiracy drama freaks. But something doesn't smell right with this right now, to me. This is something where I think QE is coming up pretty soon. They're basically saying that QE will not involve more money printing. It's going to be like a sterilized QE. So they don't want to call it QE. It's going to be QE, but they don't want to call it that because they don't want the markets to react and go into full-on pushing up the commodities prices, because that's politically bad right now in an election year. So they had this sudden and curious collapse in precious metals right after Bernanke says QE isn't coming soon. You could say that was deliberate, but the market expected him to say that, so they all got on the short side, and maybe greed pushed down the precious metals more than actually a rigidly controlled conspiracy. But the federal government does not want the commodities, or the people that are running everything do not want the commodities higher in an election year. I don't know if that's going to happen that way though. The government decision, this was a fake decision. It was turned out to be a rumor. There was this rumor to unlock the strategic petroleum reserves again, crushed gas prices, but that was basically for a day, and they kind of rebounded. But it is policy of the current administration to try to knock down commodities, and I think this fake rumor was an attempt to do that, but they sprang back up. It didn't work. And Wall Streeters close to the Fed predict, Goldman's Jan Haysius, I don't know if I'm saying that right, but he's one of the guys close to the Fed, predict that sterilized QE is coming in April or June 2012. That is, I think it's coming up pretty soon too. Now, for me to be short silver actually is a dangerous move. But I think it's a move I'm only going to make for the next 2 or 3 weeks. And I'm not sure about this week, but I'm thinking possibly Monday is something the markets might be down on the commodities and the precious metals. Technically, also the euro is getting up to another point where it's probably going to get slammed down a little bit just on technicals. And there is a very rough correlation between the euro and the precious metals. And going on with this last thing here about the Federal Reserves and government's policies, they basically have two goals: prop up the equities market and crush commodities assets that are politically and economically dangerous, such as gasoline and food prices. I don't know if they're going to be successful in that, because, like I said, I think Obama might be in the hip pocket of Soros, but Soros is totally at odds with other people in his country, and there are elite in his country that are 100% pro-USA, and Soros is somebody who says he doesn't really care for the USA. And I think the major oil elite are at odds with Obama, considering what he did with the Keystone Pipeline, the tax breaks, and a couple other things. So I think, if they can they'll try to knock him out of office. They will. I don't know if they'll succeed, but there's elements that are looking to knock Obama out of office. And if that means oil and gasoline prices go up, so be it, so be it. So, but as far as the silver market again, I think that, you know, as I am holding on with a short position, you might be thinking it's crazy, you know. To me, I don't know the future, but I do know that silver tends to drop a hell of a lot faster than it goes up. And there's a few things, not just technically, but also the situation with the euro, that could, you know, make it drop pretty fast. It could be over this next weekend. It could be on this date, on the 26th, on Monday. We might see silver down some. That's a total guess, because I really can't base it upon anything. But something doesn't smell right with this euro situation. Now, obviously, if I can look up and say Eric Sprott is selling so many ounces of his PSLV or so many shares, that would be wonderful, but I can't. So, but I'm going to hold my position. It's a risky maneuver, but I'm going to hold my position, and for at least a couple weeks, unless it starts going up to like 35, then I'm thinking that's a very bad sign. But, you know, making minor moves like that, I'll still be hanging in there. And that is one reason I chose double leverage versus triple, because you can hang on to that fund. It doesn't erode as much. And it's probably just going to be for about 2 or 3 weeks. And I'm going to start switching going along.